the way that I operate is that everything is dictated by the financial plan. So, someone that I consider a client is not somebody that comes to me requesting certain investments or denying other types of investments. That's something that when we paint the picture during the discovery process before they even become a client, we find out, if they have the ability to take advice. And that's one of the things that's the biggest part of someone being defined as an ideal client for us is, do they have the ability to take our advice?
You are tuned in to the Money Script Podcast. Today we will share strategies to help you grow your financial literacy and improve your money script. I'll be back with some important announcements. Until then, enjoy the show.
Welcome to the Money Script Podcast. It's your host, Yohance Harrison. So happy to be with each and every one of you today. I am back for another edition of Between Two Advisors. And I have with me today someone who has become one of my mentors. He doesn't even know that I've already put him in the mentor category, but one of my mentors.
Great. Honored.
Also someone that has had a similar relationship with the financial services industry as I did because of the time that we got into it and some of the things that we had to go through. So for those of you that are here with us on YouTube, you see he's already here. For those listening in, Ben Beck, welcome to the Money Script Podcast. How are you, sir?
I am awesome. It's great to be here, man. Good to see you.
You as well. So we just saw each other a few weeks ago, and now I'm going to date this podcast because I have to. And you mentioned that you did not have a pony in the show, and the show I'm referring to is the World Series. Well, I guess it was the playoffs at that point. So now that the landscape has changed since we last saw each other, do you now have a pony in the show?
I'm embarrassed to tell you and share with everybody that I don't exactly know who is in the World Series right now. Is it the
so you don't have a pony in the show? So yeah,
I don't know.
You don't have a pony.
Quick answer to the question is no.
No. Okay. All right. So I thought maybe you'd make some sort of allegiance or alliance at this stage.
Yeah.
I can only tell you that I know the Dodgers are still in and Yankees are still in. I believe the Dodgers are playing the Mets. The Yankees. Okay. I don't even know who the Yankees are playing. So my mother-in-law is a huge Dodgers fan, so she makes sure that I'm all the way up to date on everything happening in Los Angeles. So.
I was casually paying attention because my 11-year-old son is a big Xander Bogaerts fan who used to play in Boston where I am, and now he's with the Padres. Padres, I know, got knocked out, and he stopped talking
by the
Dodgers.
A little bit.
Yeah. So
okay.
By the Dodgers.
Oh, so your news has ceased. Okay, got it. So there's no
exactly.
no recent updates at this point.
Right.
I see how you educate your clients how not to pay attention to the market. See, just like you don't pay any attention to baseball.
Baseball, it's crazy.
I like to poke Ben a little bit about baseball because Ben played a lot of baseball in his younger career. So if you would, do you mind just sharing a little bit with our audience, kind of your baseball experience? I thought it was a very compelling story.
Sure. Yeah. I mean, I grew up like a lot of us, that are athletes, just falling in love with sports. It's what makes me, when it comes down to it. It's competitive and such, and ended up going to Northeastern University to play baseball, and then had an opportunity to play professional baseball for a few years after college, which was just just a great experience. Ended up playing in the independent leagues for about 3 years, and saw the writing on the wall after like 3 years. Wasn't getting the opportunities and to move further, and was starting to think about, how long can you hang on, and make something of this. And luckily I got the opportunity through my wife, actually, a contact of hers, to get into the financial world. So it was a great 3 years of playing ball.
Yeah, no, that's awesome. I never got the chance to play at any level other than high school. That was it. And it wasn't baseball. Baseball stopped at Little League for me.
Yeah.
I wasn't good enough. Let's just put it that way. I wasn't.
Yeah.
I could run, and that's about it. So
yeah. So what did you play basketball or track, or what did
basketball, football, track, cross country, swimming, and did everything else.
you do? Oof.
And everything.
All
So
right.
I was injured in the 10th grade playing football, and that's what led to swimming and then
Okay.
cross country. But then after 10th grade, that was it for me. I didn't do any more sports. I switched schools, and I went to a much more competitive school for 11th and 12th grade. And I had nowhere near the skill. I mean, a lot of those kids went to I shouldn't say kids, they're all adults now, but a lot of them went to college on football, baseball, soccer, all on scholarships coming out of West Charlotte High School. For those of you that are listening, you know who you are. So yeah, it was we were one of the largest schools, had many state championship flags hanging in our gymnasium. So I wasn't on that level by the time I transferred. So that was it for me. After that, recreational only. That's it.
Yeah. Well, you're taller than I am. What are you, 6'5", 6'6"?
6'5". Yes, indeed.
6'5". Big dude.
So I get to use the intimidation factor. It still works.
Yep.
And usually that's it. I usually play the mind game or anything else. Make people think I'm better than I am, and then they're not willing to try something. I'm like, all right, yeah, you have to keep it on the outside. Don't come inside. Don't. And,
all right.
And they don't.
Don't bring it.
I'm like,
don't
all right,
bring it
somebody
in here.
else can check them. Yep, somebody else can check them.
Yeah.
I'm stay right here in the paint.
I love it. Love it.
So one of the things, Ben, that that drew me to you as you shared your story on the altruist stage. So we met at one of the altruist conferences, probably at least a year, maybe more ago.
Yeah.
Is you were sharing about one of your favorite human beings on the planet, non-related, and that also helped you along in your career as a financial advisor. And so I brought a little something here. I wanted to see if you are able to recognize it. I'm going to seriously date myself here. Yeah, let's see.
Oh, there we go. Oh yeah. Yeah, Nick Murray. Oh, you've got an actual old school CD.
The old school CDs. Nick Murray Masterclass of 2007.
Wow. All right.
Yeah.
That's incredible. I'm going to have to talk to you offline about getting a little copy of those or something.
I don't know. Nick's a little particular about that. Nick, you didn't hear that.
We won't
play it for him, Nick. I'll just play it for him. One of the best things I ever did early in my career, when after I did this course, I took those CDs and downloaded them and put them on my iPod. And so that's what I walked around listening to for years. And mind you, how classic is it that this was 2007? So 08, 09, that's all. I would just put that in. And I would just repeat whatever Nick just said. That is what I did for those entire 2 years. I just repeat what he shared. And it was some sage advice. So tell us a little. Well, first, let me start with this. Listeners that don't know, Nick Murray is probably, if you've been listening to my show a while, you've heard me mention him before, but he is probably someone who is known as the financial advisor's advisor. He's been in the industry since the 70s, I think, or early 80s. Seen a lot.
Yeah.
Started counseling advisors. I got to meet him my second year as an advisor. So in 2002, he was brought out to Dallas, where I was living at the time. We went to the Las Colinas racetrack, and he was our guest speaker. And I promise you, I wrote down every word he said. I had never met anyone so amazing, and never met anyone that was also able to help me understand what I had gotten myself into. because like Ben, like you, sir, I also had come from, no career essentially for me, but just kind of jumped into finance. And it's like, okay, this is it. This is what I'm doing. And came in right as 9/11 happened. And I said, well, this isn't what we were talking about for the last 2 years. What is this? And everyone gave me I don't know, figure it out. So being able to hear from Nick Murray shortly after that really opened my eyes to things like understanding inflation, understanding having a long-term plan, finding my voice, knowing what I'm going to say and saying it with conviction. And just really changed. I will say it. If it weren't for Nick Murray, I would not be sitting in this seat right now. As a matter of fact, I've brought one other little prop here. So you recognize that. Oh, you see, it's all torn up and stuff. Can't even see what the title is.
Is that the new financial?
Voice. Oh, that is the new financial advisor.
Financial advisor. That's right. Yeah.
All with the bind, all torn up. There's so many highlights and underlines, and man, every now and then I'll go back and read it, and I'm like, oh, that's why I say that to this day. Okay, because I picked it up from his book many years ago.
I mean, I love that background, because it's truly incredible, and maybe certainly folks that are listening that aren't in our world, the financial advisory world, while they may not know who Nick Murray is, perhaps they've had an influence or a mentor in other areas of their life where that type of impact has happened. Because I'm right there with you. I mean, I agree, and with you, and same for me. And I found Nick Murray a little bit later in my career. I had another mentor who I still have today that coached me through those times early on. But I came across Nick Murray about 5 or 6 years ago, and even though I was further along my career, I'm going to repeat the same thing you did. I wouldn't be in this seat that I'm sitting in today, where I am, if it wasn't for him. And it's so funny. I don't think we talked about this in person before, but even today, when I have 4 kids. My youngest is 6 years old. To get him to sleep at night, I still have to go in his bed and I read him stories and we do prayers, and then as I'm getting him to sleep, I have the iPad open and I'm reading Nick Murray's newsletters. And some of the newsletters go back. I think he started that in 2001. And the funny thing, or the amazing thing to me, is no matter what we're going through today, even going back to 2001 was over 20 years ago. His writings from back then, are so prudent and current for what's going on today. And the message doesn't change. He said it a little bit differently along the way, but the true message hasn't changed. So it's been so impactful for me.
Indeed. Yeah, no, Nick does know how to repeat himself, especially in those newsletters. And sometimes I look at the newsletter, I'm like, Nick, you wrote this already. Yeah, all you did is you went back to a similar time and you just swapped out a few words and you just put this out again. But it is, he does give very timeless is the word, advice that are evergreen advice.
Yeah.
Now he did go back. So he wrote the Excellent Financial Advisor. Yeah, he wrote the Excellent Financial Advisor, and then he came back and wrote, I don't know if you've picked this one up yet, the Behavioral Investment Counseling.
Oh, yeah. Yeah.
So it was interesting because in this one, he actually said out loud, I may have gotten a few things. He didn't say wrong, but he said his perspective has changed on a few things. And that's because the dynamics of how we engage with clients change. When he started his letter, it was A shares, B shares, and C shares. And,
totally different industry.
Totally different industry. And today we have, wrap accounts and asset-based accounts and structured products, and it's changed. It's changed dramatically.
Yeah.
And so he's discussed how those changes has changed the way he looks at not only running a practice, but building a business and being a client himself, an investor himself. One of the funny things about Nick Murray, and this is for the audience, is this will, you may find this amusing. Nick Murray doesn't believe in bonds. He believes in equity portfolios. He doesn't, he believes that your portfolio should be in all equities, no matter your risk tolerance, which is just, it's a hard pill to swallow. I still haven't swallowed it. I'm like, I'm going to put a few bonds in this portfolio. And it's really because of how I was, I was trained in the business and going through CRPC and learning how to asset allocate, et cetera. But if you're a client of Nick Murray's, you will not own any bonds. You will be in an all equity portfolio, which means you're going to experience risk in a in a different way. But that's his conviction, and it's worked. I mean, the thing is, if you go back and look at it, he's been right so far. So I find that interesting.
It is interesting. We're an entirely equity-based practice. So we build portfolios of individual equities, and we don't own any bonds. Actually, the name of our podcast is called the No Bonds Cast. So that tells you enough about what we believe in or don't believe in, for that matter. But you bring up an interesting point about, I'll use a different word. You live and learn over your career, right? And I think that it's natural to somewhat pivot with your beliefs, in terms of, because, back in late 2004, when I got into business, I didn't really know much difference between a stock, a bond, a mutual fund. And so right from day one, you're developing a perspective, right? And then you have a stimulus along the way that happens, and you learn some other things. And so you kind of quantify, or you figure out that perspective, and that perspective changes a little bit over time as you experience new things. But Nick Murray has been one person, even though he's not necessarily a direct mentor of mine, I consider his work an incredible mentorship for my practice, because it just clears. And I know you're a big proponent of behavioral finance and behavioral counseling, and I think that's why you and I hit it off right off the bat, because we both feel that while investments are really important, our biggest value to our clients is to help modify their behavior over time as it applies to decisions that they're making financially, and particularly decisions that will often derail their financial plan, which is of course what we want to avoid. But we're all human beings, so we're prone to making emotional decisions. So you and I, our work has a lot to do with helping. I'll take a step back. Empathizing with folks, right? We're not going to be able to change their behavior on the spot, but if we can empathize with folks and allow them, some room to see the bigger picture, and maybe we can build a level of resilience in them for when the next market downturn comes, or they're faced with another stimuli, which one's singular? I don't know. But in any event, when they're faced with a challenge, perhaps they can, they'll be more resilient with our help.
I'd like to ask you your opinion on a question I received from a client just this week. New client relationship, and I'll repeat how they describe their investment risk tolerance. They said that they don't like taking a lot of risk. They'd rather take risk inside of real estate, but they made these large deposits. So let's say $100,000 to their retirement accounts right before the last day they could do it for tax day. And they don't want individual stocks. They just want to be in index funds. And then their question was, instead of investing all of this now, shouldn't we wait to the next downturn? So I'm curious, if that question came to you from a client, how would you respond? And let's assume that it's long-term money. It's in their retirement account, so it's going to need to do something with it at some point. But I'm curious, Ben, how you would respond to that client's request.
Yeah. Well, I mean, the first thing that stands out to me is that this is preferably an area that we really unearth prior to them becoming a client. What I mean by that is some of the things that I heard you say was they don't want this, they want this, they have a feeling towards this. The way that I operate is that everything is dictated by the financial plan. So, someone that I consider a client is not somebody that comes to me requesting certain investments or denying other types of investments. That's something that when we paint the picture during the discovery process before they even become a client, we find out, if they have the ability to take advice. And that's one of the things that's the biggest part of someone being defined as an ideal client for us is, do they have the ability to take our advice? Are they coachable? And I'll steal something from Nick Murray here too, is that I liken this scenario to walking into the doctor's office. Do you walk into the doctor's office and say, I want this medication for this, I think it's this that's wrong with me, and therefore, and the doctor makes a diagnosis and a recommendation, I don't think you say you'll think about it. I think you go to the doctor's office saying, hey, look, this is how I feel. Please tell me how I can recover and get better. And the doctor's responsibility.
6.
Yeah. Yeah, you know it well, I'm sure. So, to answer your question more directly, which wouldn't necessarily, I would expect be the case, but sometimes people go through things where they hear something and they say they want to invest in it. So I would back up and say, ask them some more questions about, what's driving that decision and how do you think this will impact your financial plan? To which they'll probably say, well, I don't necessarily know. And say, well, let's talk about that a little further, because what we have in place right now is well designed to achieve what we set out to achieve from day one. And if we're going to depart from that plan, then we're going to go into territory that I'm not going to be comfortable with, perhaps, and therefore, from a professional standpoint, I don't want to be involved professionally in a scenario where I'm not able to do my best for someone. So a little bit long-winded an answer, but I think Beautiful. It's always good when you get these things out of the blue, this example, this scenario, it's important that we're not swayed by a particular client request. And I don't know how I'm sure, not knowing exactly, but I'm sure your interactions are very similar to mine. Folks come back from the holidays and their brother-in-law might have said that, oh, you're going to be in these alternative investments, or you're crazy to be in the equity markets right now. Don't you know an election is going on? We're going to see a tremendous amount of volatility. And, it's our job to kind of reel that back in with our clients and make sure that they just, don't make decisions that are going to derail, the beautiful thing that we put together for them and with them.
And so thank you for that. When you were going through the 08, 09 crisis, that was before then Nick Murray was in your life. How did you handle that? I mean, what was your experience as an advisor during that time? I mean, you probably been 4 or 5 years in the business that had nothing but bull markets, and then all of a sudden get smacked with what we then call the greatest recession since the Great Depression. How was that for you?
It was terrible. And at the same time, this is going to sound weird. It was terrible, it was amazing in terms of the enlightenment and the education that I received. So this was to your point, this was pre Nick Murray, but I had another very similar Nick Murray-like character, albeit maybe not so terse. with his communication methods, a guy by the name of David Malik, who is by far my most important mentor, and he actually created the investment strategies, the philosophy behind how we invest. A lot of similarities with Nick Murray in terms of 100% equity portfolios, no bonds, but an understanding of, best way I can put this is, if you're going to be successful as an advisor or an investor, you're going out there on that boat, and you better not ever think or have a feeling that you can control the ocean. You better understand what you can control, which is
Chapter
what your
3.
own actions. There you go. Your own actions. And so his mentorship, David's mentorship to me, he introduced me to strategies. I met him for the first time in, I think it was early 2006. And so, yeah, you're right. I got in the business in late 2004, had a couple of years really during the training program, building my client base up. You really didn't know, right? If you think back to that time, you really didn't know in late 2007 that we were in something bad. 2008 comes along and some things start happening. And of course, we hit the bottom eventually. Even though it was a terrible 2008, we hit the bottom in March of 2009. So, and you're surrounded. At the time, I was surrounded at Merrill Lynch with 100 and some odd other financial advisors, some very successful brokers and groups. And more often than not, you would talk to them and they, oh yeah, I put all my clients in cash. We're not, this is the worst thing we've ever seen. And this time it's different, and all these different things. And at the same time, I talked to David Malik, and he said, look, you've got to block that noise out, because I don't know how far this type of thing will fall and for how long that it will go on, but I do know that it will recover at some point. And your responsibility to your clients is not their portfolio for 9 months. Your responsibility to your clients is essentially perpetual. It's 10 years, it's 30 years. This money is for the next generation. So, you believe that things will recover as they always have, and you just have to block out the noise. And so I say that was terrible because it was a tremendously uncomfortable time working with folks and, understanding their emotions and not really having any answers myself. Who answers? Nobody had answers.
Nobody had answers.
Other than, yeah.
Who's going bankrupt today? Yeah. I don't know. Let's check the paper and see.
Yeah. Yep. Yeah. But I say enlightening is because I am so fortunate to have something so bad like that happen so early in my career, because it was such a great teaching moment for me. And it's educational. It's an invaluable education, as I'm sure you agree. I mean, you got in the business a little bit earlier, but you got in the .com 9/11 time period, right?
9/11. So my first day to see clients was supposed to be September 12th of 2001. I was supposed to be my client ready date. Yep, so I was fully licensed by September 1st. They told me licenses would clear in about a week and I could start on September 12th.
Yep.
But September 11th happened, and I was just happy to have a job. I was like, wait, I still have a job? Okay, cool. Thanks. But they wound up pushing out our start dates by a month. So I didn't start till October 11th, but my son was born on October 10th. So I was just full of false starts. But yeah, so that was on the back end of the .com. I mean, the September 11th was the event, but the .com was continuing to unwind well into 2002. Mm-hmm. So 2002 was actually the year that most people were losing the most money, if they were still holding on to a lot of those tech stocks at that point. But then it was off to the races. 03, 04, 05, 06, 07. It was like, oh, this is what it's supposed to be like. And then here comes 08 and 09, like you said, 09 more than anything else. And then a little, was it 11 or 13? 11 or 13. We got
Flash
reminded,
crash.
like, yeah, we got reminded, look, volatility is still here. But then we went on this incredible run until 2020. Mind you, if you were looking at the numbers, they were starting to deteriorate in 18 and 19. When you look at some of the PEs, when you get into the weeds and stuff.
Sure.
So it was one of those bubbles kind of waiting to pop in 2020. But then that was short lived. 22, we had it down. We were in I guess a bear market, you could say. In 22, we're pretty close to it. But since then, 23, 24, I mean, election be damned. The market's like, so what do you want me to do about it? You know, there's
so the only lesson I can take from that, right? I mean, and you in particular, entering the business when you did in a decade where you had 2 peak to trough declines, at least in the S&P 500, of one was very close, I think, to 50%. 08 and 09 was at, I think that it was around 57 or 58% peak to trough decline. That is a priceless education, as you were just going through, walking through the next decade and everything, about how incredibly difficult these shorter time periods are. But they're looking back, and we're seeing all these incredible recoveries. And if you would have invested money at the top of the market prior to the tech collapse back in early 2000, so you could argue the very worst time in the last 25 years to invest money. I don't know what your annual average is exactly, but it's somewhere around 10% a year over the last 25 years or so, or somewhere close to that. So, and we've had, how many bear markets did you just count there? You got 2 in that first
6.
decade. Yeah, something like that. And not to mention just numerous 10% plus corrections along the way. That tells me that it's investor behavior, that is job number 1 for us, given this incredible experience that God has put in front of us early in our careers, to say, to show that this is going to be hopefully, 57-point declines are not reality going forward. I don't think that's going to be the case, but the standard bear market absolutely has been in history. And, I just feel incredibly lucky, as I know you do as well, to have gone through those just incredibly difficult times, because it taught us that things recover, and you have to empathize with clients and build resiliency in them, so that they can have confidence in the plan and continue working the plan so that they benefit from that in the long term. And if they do, what an incredible amount of financial independence they have as they move on their lives.
Indeed. Agreed.
Yeah.
One of the things we like to ask all of our guests, Ben, and I hope you will share with us. I know you will. You're open to it. We like to ask all of our guests to share with the audience your first memory of money. So, Ben, what is your first, or was, or is your first memory of money?
My first memory of money will I got two here, but I'll make it quick. My first memory of money I can remember is, this is so funny because it's a stamp on the times that we were in, watching my mom balance the checkbook with this little like billfold type of thing. And, she had written a check at Shop and Save in South Portland, Maine. And we're at home, and she's writing down, the amount and balancing it. Okay, I had $2,000 in my account. She probably didn't have that much, and now I've got X. And that was the first memory that I can call up of like really what money was all about. And it's incredible right now. Everything now is electronic, right? It's like balancing the checkbook. I mean, you just log in and see where you're at.
Yeah.
Today. But a close second, really, where it really solidified with me, when I was 10 or 11 years old, my father, who was a longtime school teacher, in the summertime started a landscaping business. And he literally just decided one day that, hey, I want to make some extra money. I'm going to go buy a lawnmower, weed whacker, equipment, and I'm going to put an ad in the local magazine, local teacher mowing lawns, and put the phone number. And I started to help him. My older brother started to help. And within a couple weeks, literally a couple weeks, we had 25 accounts. People that had called said, yes, of course, I wanted to. And I got paid $5 a lawn, all right, at 10 years old. Now you look back at that, you're like, one thing I learned there, it's good to be the owner. You charge $25, you pay your.
Yeah, I was thinking, I was getting more than that. It was like $5. Like, we're the same age. Like, what lawn? But I forgot you weren't the owner. So I was the owner of my lawn service. So,
you were the owner. Oh, okay, gotcha. I was the 10-year-old son that But as you do 7 lawns in a day at 10 years old. That was the second.
That's good money. That's good money.
That's like my recollection of like learning about what money was all about was how independent I felt as a 10 or 11-year-old having $35 in my pocket on a Saturday. And I'm like, wow. And what it also taught me was to be an entrepreneur, and the idea that you can do whatever the hell you want to do. If you a lot of people have the ability, and you hear that a lot. Do you have the willingness to say, you know what, I'm going to go out and invest? I don't know how much a lawnmower was back then, but he got a good one. It was a push lawnmower, but I don't know, a couple $100 to buy a lawnmower.
Yeah.
And I'm going to take that risk, and I'm going to go work because I am willing to do that. And if you're willing to put the work in, and I looked at that and said, oh, so I can build my financial independence. I didn't know anything about lawnmowers or anything, but I knew how to mow lawn, and build some financial independence by taking a risk and doing something. That's what my dad taught me then. And I think it's really impacted where my life has gone. And it's really, at this point, no longer a surprise. I found my way into a field where I can help folks build their own financial independence. I just don't think that's a mistake. Somehow destiny, pushed me in this direction.
I love it. Well, Ben, thank you so much for nerding out with me a bit about Nick Murray today.
I love it.
Client behaviors, of course, not just client, people behaviors, investor behaviors overall, and just giving me some insight on being a little bit more, I guess, not the firm's not the word, but I would say devoted to my mission as a financial advisor, reminding me that I am, as Nick Murray said, Dr. Noah. And I'm not going to ask my doctor. When I had surgery, I didn't ask any questions to the doctor other than, are you qualified to do this? Great. Okay. You've done it a few times, hundreds this year. Cool. All right. Where do I go to sleep? I didn't tell him where to cut or how much blood I wanted, but I did find out after the surgery that I had fentanyl. I was like, what? Y'all gave me fentanyl? I was like, yeah, that's common in surgery. So I was like, oh. Am I addicted now? They were like, I don't know. How you feel? I was like, oh God. But yeah, I didn't tell him not to give me fentanyl. He asked if I was allergic to anything. And I said, not that I know of. I mean, they'd find out on the table. But I didn't do that to my doctor. I didn't do that to my surgeon. I just went to the doctor yesterday for a checkup. And he told me some things that I needed to be doing. It's like, thank you. Walked out. Yeah. I didn't. Yeah. So I encourage those of you, general public that are listening here that have financial advisors, remember that you went to your financial advisor as a professional. You did the research, you looked at their credentials, maybe you got referred from someone else, and they said that this is a trusted resource, and you came to them with a problem and they offered you a solution. You can question for education, but don't question the method, because they're giving that to you because they know it's right for you. Okay. That's my opinion anyways. With that,
the best financial advisors are not order takers, right?
Exactly.
They are purveyors of priceless advice. But you got to let that advice happen. No, we're really well said, man.
Indeed. Well, we thank you for joining us on the Money Script podcast. We will put links to how you can learn more about Ben and his firm, especially if you're up in that area and are looking to interview a new advisor. And of course, we will see you next week. Well, you'll see me. Actually, no, I am doing another podcast today, but we're going to save that one to next year. So I'll see you next week with the new guest. Until then, do yourself a favor and do a favor for someone else and share this podcast with one person. Until then, take care.
I'm back. Wasn't that a great show? I hope you learned something. I know I did. Now, before you go trying anything you heard today, remember, it is not intended to be specific tax or legal advice. If you need that, go see a CPA or an attorney. If you would like any complimentary consultation with a knowledgeable advisor, visit moneyscript.com and schedule a 15-minute consultation. Want Yohance to come to speak at your next event? Go to the Money Script website for that too. Of course, if you're watching on YouTube, make sure to like, comment, subscribe, and click the bell for notifications. MoneyScript Wealth Management is a registered financial advisory service in multiple states. Want to learn more? Get the full disclosure on our website, moneyscript.com.